What's up? It's Kelly and I'm the captain of Even Keel Ops. And in today's video, we're going to talk about understanding and using your profit and loss report. Okay, we're going to start today by talking about what is a profit and loss report. A profit and loss report, also called a P&L or an income statement, is a report of revenues and expenses from a specific period of time used to determine whether your business generated a profit or a loss. I learned about P&L reports during my business life in the corporate world, and I love reading P&L reports. They can tell you so much about a business and whether it's profitable, not profitable, and a lot of times by looking at your P&L report, you can tell why a business is not profitable or why a business is profitable, which is what I hope you get when we look at your P&L report. So publicly traded companies are required to publish their P&L reports online for everybody to see. We'll look at a published public P&L report, and then I'm going to walk you through the steps of creating or generating your own P&L report and then reading it and using the information to better your business and your budget. So let's get started.
Let's look at Amazon.com's profit and loss report. I'm going to use the profit and loss report on NASDAQ.com. You can probably find a more detailed version on Amazon.com under their Investor Relations tab. However, when you're learning to use and read a P&L, a more simplified version is easier to work with. So you can see here, they start by listing the period ending. So this would be January 1st, 2016 through December 31st, 2016, as well as 2015, 2014, and 2013. On the first line, they list the total revenue they made from selling all of their products and services. Next, they list the cost of generating that revenue. This would include things like employee payroll. So they take their total revenue minus their cost of revenue or cost of goods sold to get their gross profit for the year. Next, they have to take away their operating expenses like research and development, sales and general administration, non-recurring items, and other operating expenses. These are expenses that are necessary to running a business but do not help generate revenue, such as the power bill or, flying your salesperson to a conference across the country to participate in a speaking event. Things like that. They've also listed several other types of income and expenses before getting to their net income or their loss for each year. As you can see, Amazon had a profit for 2016, 2015, and 2013. But in 2014, Amazon experienced a $241,000 loss. As we move into looking at your profit and loss report, keep this in mind. All companies, even big ones like Amazon.com, sometimes experience a loss. It doesn't mean that you're in big trouble. It just means you need to look at what happened and then try to fix it. So let's look at how that happens. In your accounting system, you are looking for a profit and loss report or an income statement that your accounting system will generate for you automatically. If your system will not generate a profit and loss report or an income statement, there is a workaround. You can generate a revenue report and an expense report for the same time frame, and then use the totals from those reports to find your profit or your loss. And I'm going to tell you how to do that in just a minute. But first, if you are not yet using an accounting system, I highly recommend that you start doing that now. There are free resources like Wave for accounting and low-cost resources like FreshBooks and QuickBooks and Xero. Lots of options out there. If you're not using an accounting system, though, you can find out your profit and loss by listing your expenses and your revenues on an Excel or Google sheet, kind of like this. So first, you'd list all of your incomes from the time period you want to look at. So you'd list the date, the customer, the product or service you sold them, and how much revenue you generated from that product or service. Next, you're going to want to do your expenses or your cost of goods sold. So you'll list the date, the vendor, and then the expense. Larger companies like Amazon use categories. As a smaller company, I find it easier to find the mistakes or where I overspent if I list things out individually. That way, maybe I can see that I spent $700 on a shiny object in July and I haven't really made any use of it, and I need to avoid that in the future if I'm going to generate a profit. So in order to find your profit or your loss, you're going to take your revenue and subtract your expenses and your cost of goods sold, and that equals your profit or your loss. If you end up with a negative number, your company experienced a loss. We're going to talk about what you can do about that in just a second. But first, I want to tell you how often you need to be reviewing your profit and loss report. This is a monthly, a quarterly, and a yearly activity. You want to make sure during your monthly and quarterly reviews that you're staying on track. So monthly, you're going to review like the month of January or what happened in the month of February. For quarterly, you're going to want to review all of quarter one or all of quarter two. And then at the end of the year, you're going to want to review the entire year, and you're going to want to use that information to create a budget for the next year. So when you're looking at your revenues, you need to decide where you killed it. Where did you make a ton of cash, and how can you improve upon it and bring more cash into your business? You're also going to want to look at where you missed the mark. Where do you have a product or service that's not making as much money as you thought it would? Is there a way you can better market that product or service? Can you improve upon it? Or is it time to let that product and service go so you can focus on the product and services that are more successful in your business? Next, when you're looking at your expenses and cost of goods sold, you're going to want to look at where did you overspend? Where did you spend too much money, say, on marketing, or maybe you spent too much money on travel? Maybe you even spent too much money on employees. You're going to have to decide where you overspent, especially if your business experienced a loss instead of a profit. Next, you're going to need to decide where you can cut or reallocate expenses. So if you overspent, you're definitely going to want to cut, and you're probably not going to do much reallocating. Although it's possible when you make cuts, you're going to need to reallocate money from one place to another to cover some of the cuts you made. However, if your business is profitable, you should still be trying to cut expenses. Always cut expenses. The less expenses you have, the more profit you make. Or maybe you decide you spent way too much on marketing and what you actually needed was a business coach. So you're going to reallocate a portion of your marketing money this year and you're going to hire a really good business coach. You're going to use your profit and loss to decide how much of the money you spent on marketing last year is going to be allocated to a new coach this year. All right. That is all I have for you today, a very simplified version of reading a profit and loss report. Don't forget to subscribe to be notified of new episodes, and maybe while you're here, you could check out another video. I will talk to you next time.